Elon Musk says Chinese EV brands could destroy rivals. As Tesla revenues fall, New York CNN, Tesla has become the world's most valuable automaker, promising unprecedented sales growth. But in the face of rising sales of electric vehicles by rival brands, Tesla on Wednesday abandoned its previously optimistic sales targets. Tesla has been cutting prices for more than a year to boost sales in the face of increasing competition. As a result, the company's deliveries in 2023 increased by 38% compared to the previous year. While that may seem like a big jump, the company has previously said it expects a 50% compound annual growth rate over several years. On Wednesday, he warned that in 2020 the growth rates could be markedly lower than last year. Shares of Tesla TSLA fell 7.5% in pre-market trading Thursday. In the fourth quarter, the company lost its leadership in global electric vehicle sales to Chinese automaker BYD for the first time. CEO Elon Musk told analysts on a call that Chinese automakers are the most competitive auto companies in the world and will have significant success outside of China. The remarks come as Warren Buffett-backed BYD has not only conquered its territory but is also making inroads into other markets. In December, the company promised to open a plant in Hungary, its first passenger car plant in Europe. Increasing competition from BYD and other Chinese automakers has prompted an anti-dumping investigation by EU officials that could lead to higher tariffs. And Musk, who once scoffed at Chinese electric car brands, believes they now pose a real threat. Honestly, I think if trade barriers aren't put in place, they will pretty much wipe out most of the other car companies in the world, Musk said. Tesla's sales growth target of 50% has been a key factor in driving the stock higher and making the company the most valuable automaker on the planet. Despite delivering far fewer vehicles than more established automakers, the company said its slower growth rate will be due to our teams working to launch the next generation vehicle. This next-gen car, likely a cheaper model, has not yet been unveiled by the company, and Tesla vehicles often face delays before hitting the market. The company warned that the ramp-up of production of its latest vehicle, the Cybertruck pickup truck, which went into production in late 2023, will be longer than other models given its production complexity. 3 months ago, Musk said it could take more than a year for the Cybertruck to become profitable for the company. The new growth target was part of an overall disappointing earnings report. Tesla reported adjusted earnings of 71 cents per share, slightly below the forecast of 70 cents per share by analysts surveyed by Refinitiv, but down 40% from a year earlier. It was the second straight quarter in which the company missed profit forecasts, following a string of better-than-expected earnings reports dating back to early 2021. Revenue for the quarter was $25.2 billion, up just 3% from a year earlier, despite larger shipment growth and a sign of the impact of a lower average selling price after multiple price cuts. Revenue also came in below expectations of $25.6 billion. Shares fell 5% in after-hours trading.